Hello, today we're gonna talk about bank reconciliation and we're gonna solve problem 8-25. Let's talk about the bank reconciliation. Bank reconciliation is a procedure of internal control to safeguard the most important asset for a company, which is cash. Okay, so at the end of the period, we need to compare the cash account balance in my records, in my books, with the cash account balance in the bank. They should be the same, but according to timing issues, some transactions will be recorded in the bank, not recorded in the book, and some transactions were recorded in the book, not recorded in the bank. So the bank reconciliation will have two sides, bank side and book side. Under bank side, I'm gonna start with the ending balance per bank, and I need to adjust the balance for the bank for the transactions that were recorded in the book, not recorded in the bank yet. So I'm gonna add deposits in transit for deposits that were not recorded in the bank yet, and I'm gonna subtract outstanding checks, which are the checks that we gave to someone but he did not go to the bank to take his money. So my bank account balance was not affected. That's why we need to subtract them now. Then we add or subtract any correction of bank errors. Now let's see the book side. With the book side, we start with the ending balance per book. Then I do the adjustments for the book balance for the transactions that were recorded in the bank, not recorded in the book yet. So I will add bank collections, interest revenue, and electronic fund transfer receipts or collections. So anything was collected by the bank, but I did not record it in the book yet, I need to add it. I need to subtract bank service charges, non-sufficient fund checks, and electronic fund transfer payments. So bank service charge will be deducted from your bank balance, but you did not record it in your book yet, so you need to subtract it. Non-sufficient fund checks, it's a check received by a customer. So when you received the check, you added this amount to your cash account in your books, but when you went to the bank to get your money, it was non-sufficient. So you're gonna cancel what you did in your book. You need to subtract it again until you receive it in cash. EFT payment means any online payment you have done and your bank account was affected, but your book balance was not affected yet, so you need to subtract it. Then I need to add or subtract any corrections of book error. At the end, the adjusted balance per bank and per book should agree, should be equal. So now we have this problem 8-25. We have the December cash records of Duffy Insurance. We have the cash receipts and the cash payments. This is my debit side and this is my credit side. So this is my T account for the cash. So this is my debit side. So here my cash is increasing, and this is my credit side. So my cash is decreasing. Duffy cash account shows a balance of 17,050 at December 31st. So this is my book records. And this is my balance per book. Okay. Now on December 31st, Duffy Insurance received the following bank statement. So here we have the bank statement for December. He gave me the beginning balance, 14,000. And we don't care about the beginning. We care about the ending balance. I care about this one. So this is the bank statement. Okay, So this is the ending balance per bank, and this is the ending balance per book. Okay, now here we have deposits and other credits. So this is the cash increase, and then checks and other debits. So this is the cash decrease. Okay, this is the total. This is the total. I don't care about the total. And this is the total checks. Again, we don't care about it. It's 14,000. You add to it 9,400. Then you subtract 4,920. So you get the ending balance. Okay. So now additional data for the bank reconciliation. A, the EFT credit was a receipt of rent. Okay, so these ones will help me to journalize at the end. And the EFT debit was an insurance payment. So EFT credit and EFT debit. Where can we see these ones? It's here. This is the EFT credit and this is the EFT debit. Okay, so in the bank, the credit and debit are the opposite of what we learned in the T account for the cash account. Okay, so when you withdraw money from the bank, you're gonna receive a message that your account was debited, not credited. So it's the opposite of what you've learned in accounting, okay, for the bank. So the non-sufficient fund check was received from a customer. Okay, so he's talking about this one, non-sufficient fund check, the 600. C, the 1600 bank collection was for a note receivable. So he's talking about the BC. This is bank collection. So as you can see here, there is explanations for each abbreviation. D, the correct amount of check 1419 for rent expense is 1,910. Duffy's controller mistakenly recorded the check for 1,190. So here we have an error. We're gonna check it later on. So let's do the bank reconciliation. So the bank reconciliation will have two sides, bank side and book side. We're gonna start with the ending balance per bank and ending balance per book. So ending balance per bank, it's given in the bank statement. Okay, it's down here, ending balance per bank, it's 18,480. So let's write it down here, 18,480. And ending balance per book, it's given down here. It's 17,050. So these two should be the same. But because some transactions were recorded in the book, not recorded in the bank, and some transactions were recorded in the bank, not recorded in the book. So I need to adjust these two balances to be the same number, okay? So now I'm gonna compare the cash receipts recorded in my book with the cash receipts recorded in the bank, okay? If the transaction is recorded in both sides, we're gonna cancel it, okay? I need only the transactions that were recorded in one side, not recorded in the other side, okay? So let's see, 4,190, it's recorded in the book. Can we see here 4,190? Yes, it's here. So let's cancel it from both sides. Then 510, yes, it's recorded in both sides. 550, yes, it's recorded in the book and recorded in the bank. 2,150, it's recorded in the book and it's also recorded in the bank. Now we have 1,830, it's recorded in the book, not recorded in the bank, so we need to record it in the bank. What do we call this one? It's deposit in transit, so it's plus in the bank, 1,830. This is deposit in transit. It's recorded in the book, but it's not recorded in the bank, so I need to add it to the bank balance. Now let's look at the bank. We have two items that were recorded in the bank, not recorded in the book. The first one, it's $400. It's EFT credit memorandum, which is EFT collection. It's a plus to my cash. And we have the 1600 BC, which is bank collection. Okay, so it's recorded in the bank, not recorded in the book, so we need to add them to the book side. So I'm gonna add to the book side, I'm gonna add bank collection plus 1600, and we have EFT receipt, which is plus $400. Okay, now let's compare the cash payments in my book with the cash payments in my bank statement. Check number 1416, 840. It's recorded in the book and it's also recorded in the bank. Check number 1417, the amount is 170. It's recorded in the book and also in the bank. Check number 1418, 680. It's recorded in the book and it's also recorded in the bank. Now check number 1419, the amount is 1,190. In the bank, it's 1,910. Okay, so we have error. Is it bank error or book error? I don't know yet, so I'm gonna leave it until the end. Okay, I'm gonna write error beside this one, and I'm gonna go back to it later on. Okay, now check number 1420, the amount is 1,470. It's recorded in the book, but it's not recorded in the bank. Also the 1,200 and the 630. Okay, so we have three checks recorded in the book, not recorded in the bank. So we need to subtract them from the bank. What do we call them? We call them outstanding checks. Okay, so these are the outstanding checks. Okay, I need to write them down here beside the outstanding checks. Minus 1,470 minus 1,200 and minus 630. Okay. On the other hand, there were transactions recorded in the bank, not recorded in the book, like the 600 non-sufficient fund check. So we need to subtract this from the book side, negative 600, and we have EFT debit memorandum, which is 700, so it's EFT payment minus 700, and last item is SC, stands for service charge, minus 20. Now let's see the error. If you read note D, he said the correct amount of check 1419 for rent expense is 1,910. Okay, and the fee controller mistakenly recorded the check for 1,190. Controller means the accountant. Okay, so it's what? It's a book error. It's not a bank error, because he said the correct amount is 1,910. So the bank amount is correct and the book amount is not correct. Now what shall we do to correct this error? In the book, I subtracted only 1,190, while I should subtract 1,910. So I have a difference of 720. Okay, what shall I do to subtract the correct amount? I need to subtract more 720. Okay, So to correct this book error, I need to subtract 720. Okay, now let's compute the adjusted balance per book and per bank. So in this question, we didn't have any bank errors. So the adjusted balance per bank is 17,010. Okay, let's compute the adjusted balance per book. It's also the same, 17,010. So in this question, we had two requirements. The first one is to prepare the bank reconciliation at end of December. The second requirement is to journalize the adjustments for the cash account. Okay, so we're gonna do only the book side adjustments, So in each entry, I'm adjusting the cash account. So if it's a plus, it means cash will be in the debit side. If it's a minus, then cash will be in the credit side. Okay? So the first adjustment made to the book side here is bank collection 1600. Okay? So let's read these notes. It's gonna help me to recognize the second account affected. So here the bank collection, the 1600 bank collection was for a note receivable. Since it's a plus, it means I want to increase my cash account. Okay, so the first one for the BC, it's a plus, so cash will be in the debit side. Okay, and notes receivable will be in the credit side, and the amount is 1600 debit, 1600 credit. So this is the first entry. Now the second adjustment on the book side, it's EFT receipt 400. Here the EFT credit, he said in note A, he said the EFT credit was a receipt of rent. So it's a plus, so it means cash increased. So cash will be on the debit side. Now what's the second account affected? He said it's a receipt of rent. It means I'm the landlord and I'm the one who's collecting rent. So it's gonna be rent revenue. And the amount is 400. Debit 400 credit. Now the third adjustment in the book side, it's EFT payment. Okay, so here the EFT payment, the $700, it's EFT debit. Okay, he said the EFT debit memorandum was an insurance payment. Since it's a payment, it's negative, so cash will be in the credit side because I want to decrease the cash. So cash and the credit side, and the debit side, it's insurance payment, so it's insurance expense. And the amount is 700 debit, 700 credit. The fourth adjustment was for non-sufficient fund checks. Okay, $600 NSF. So B, the non-sufficient fund check was received from a customer. So he gave me a non-sufficient fund check. So it's a minus, so cash will be in the credit side. Will I forgive this customer or he's gonna pay it later? I'm gonna receive it back later from this customer. So it's gonna be accounts receivable, and the amount is 600. 600 debit, 600 credit. The fifth adjustment was for bank service charge. Okay, it's minus. So cash will be in the credit side, and the debit side I need to write bank expenses. And the amount is $20. And now last adjustment, last one, is for the book error. So I'm gonna decrease cash by 720. So cash will be in the credit side. Now what shall I debit? Let's read note D. The correct amount of check 1419 was for rent expense. Okay, so it's rent expense. So the second account affected is rent expense. So on the debit side, I'm gonna write rent expense. And the amount is 720 debit, 720 credit. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.